Assalamualaikum and hi everyone. We meet again in today's session, which is Financial Management by Dr. Hariyaty Ab Wahid, or you can also call me Dr. KD. Guys, let's say you want to go to an interesting places, for example, Tsunami Island and Everland Theme Park in Korea, because I know that most of you love the K-pop culture, right? So Korea may be the place that you want or you plan to visit one day. So, before you can book a flight ticket to fly there, what you need to do? Of course, you need to plan, right? Regarding the itinerary, the places to be visited, the meals, transportation, and how much do all of that will cost. So, you need a sufficient budget. Actually, you are doing a financial plan before you could go there, right? The same goes to doing a business. You need to plan your financial neatly. And the topic for today is financial plan. And please listen attentively to the video. In the end of this session, I do hope that all of you could describe the steps in business financial planning and identify the key elements in financial management. As we know, a business consists of 4 basic departments, namely administration, marketing, production or operation, and also finance. We have covered the administration part in past videos. And now, it's time to focus on the financial matters. Before we start venturing into any business endeavor, there are 6 steps in financial planning that you need to consider and follow. The first one is to assess your financial situation. The second, create a budget. Third, set your financial goals. The fourth, know your risk tolerance. The fifth, work out and implement your financial plan. And the last one, regularly review your financial plan. Resource allocation refers to the distribution of resources, and in particular finance from the center of peripheral levels. So here, before you start allocating the resources, you need to know the key elements in financial management. Actually, there are 3. The first one is allocation of finances, controlling resources, and financing decisions. Allocation of resources is one of the most important tasks that new business owner must think of. The first one, you need to assess financial situations. You need to ask several questions like this. What financial assets do you have? How much do you owe? A net worth statement is a financial balance sheet, the total of your assets, for example, what you own, minus your liabilities. It's regarding what you owe. You have to know how to do this financial balance sheet, and also you need to determine your liability and the assets in your company. And you need to prepare a net worth statement that will help you to assess your overall financial situations and make wise decisions. The second, you need to create a budget. A budget actually is a key component of your business startup plan. And before you get started with the budgeting, you need to ask these questions. The first one, what do you need to kickstart a business? What are fixed and variable costs for the business? What you need to make your business operating? What is your sources of finance? So here, before you begin to work with the budget, you need to consider why you need to spend the time to create a budget. Even if you don't need bank financing, creating a budget is still a valuable exercise for a new and continuing business like what you are currently doing now. So a budget can be used to indicate some of the following. The first one, the funds needed for labor or materials. For a new business or total startup cost, you need budget to calculate your cost of operations. You also need budget to anticipate the revenues necessary to support the business, and also you need to have a budget as a realistic estimation of expected profits from your business. Here are some terms of financial cost that you need to consider before starting a new venture. The first one, facilities cost. It is for your business location. It is like facilities cost is like business location, including all the costs of setting up a leased location for your store, the office, the warehouses, or for buying a building. And these costs may be called leasehold improvements or tenant improvements. For example, you may need walls or bathroom or a special secure area in your office or building. If you are working from home, you probably won't have location costs, but you may have costs to fix up a room in your home for an office or a small production area in your garage. Facilities costs also include lease security deposits and also signage. The second is fixed asset. It is sometimes called capital expenditures for furniture, equipment, vehicles needed to set up your location and to start your business. In here, fixed assets also include computers and machinery, furniture, and anything for your office or your warehouse that is needed to set up your business. The third is materials and supplies. Like office supplies, advertising and promotion materials, you will need an initial supply of these to get started. The fourth is other costs like licenses and permits, or insurance deposits, or legal fees to register your business with SSM, and preparing operating documents. And you also need to gather information on your fixed expenses each month. Okay, here is a list of the most common monthly fixed expenses that you need to know. The first one is rent, if applicable, utilities, phones, business phones and cell phones, website service fees, equipment lease payments, office supplies, advertising, publicity and promotion commitments like social media or continuing online ads, business insurance, professional fees, be it legal or accounting, employee pay or benefits, miscellaneous expenses, and business loan payment, if any. Then, please add variable expenses into considerations. These are expenses that will change with the number of customers you work with every month. So you need to consider the monthly variable expenses. This might include postage, mailing, packaging and shipping costs, commission on sales, production costs, raw materials, the wholesale price of goods to be resold, and also packaging and shipping costs. If you have a service business, you may not need many variable expenses like this. Okay, so you need sufficient source of income to finance your business project. You may use your own saving, to get the money to start venturing, or you may get the funds from your family members, your friends, or you can obtain any financial aids from banks or other financial institutions. And you also need to estimate the monthly sales, because even though this probably will be the most difficult part of a budget, because you don't know what sales will be for a new company, but you might want to do 3 different sales projections. To be realistic in your budgeting, you must assume that not all sales will be collected. Depending on the type of business you have and the way customers pay, you might have a greater or smaller collections percentage. For example, if you estimate sales in the first month to be like 50,000 ringgit and your collection percentage is like 85%, so show your cash for the month to be likely 42,500 ringgit. The second comes controlling the resources. You need to stretch out your own working capital budget by taking a detailed look at how you manage your business resources. Purchasing or leasing equipment, buying office supplies and services are decisions you perpetually make to effectively run your business day-to-day operations. By knowing where your profits are spent, you will be better positioned to make wiser financial decisions. A list of easy to comprehend tips can motivate you to closely examine the resources that impact your savvy business lifestyle. So here you need to set maximum financial spending limits you need to set maximum financial spending limits on monthly cash flow budget. You need to keep a list of different suppliers for the same type of equipment use. You need to base buying decisions for equipment, supplies and services needed in the short term to operate the business. You need to stock up on office supplies, services and equipment utilized on a regular basis. You need to pay suppliers on time. You need to view the cash flow statement regularly and also calculate the cash conversion cycle. Running an organization must involve taking thousands of decisions a day, as you can imagine. So let us learn a bit more about these types of financial decisions. If carefully reviewed, you need to set the financial goals first. you need to set whether you want to get profit. For example, like profit margin of 25%, you need to set the growth of the business. For example, increase of 20% of capital growth, cash flow. Maybe you need to have internal cash flow of 50% to fund a new capital investment. You need the financial goals like to survive. For example, to increase of 40% shareholder value. So here, without money, a company won't survive, and without decisions, money can't survive. So administration has to take countless decisions in the lifetime of the company. Thus, the most important ones are related to money. The decisions related to money are called financing decision. It is the financial decisions related to raising of finance. It involves identification of various sources of income or sources of finance and the quantum of finance to be raised from long-term and short-term sources. A firm can raise long-term finance either through shareholders, funds, or borrowed capital. So here, you need to know these three financial managers always focusing on. It is investment decisions, financing decisions, and also dividend decisions. Investment decision are also known as investment decision is also known as capital budgeting decisions. A company's assets and resources are rare and must be put to their utmost utilization. So a firm should pick where to invest in order to gain the highest conceivable returns. These decisions relates to the careful selection of assets in which funds will be invested by the firms. The firm puts its funds in procuring fixed assets and current assets. When choice with respect to a fixed asset is taken, it is known as capital budgeting decision. Okay. Financial decision is concerned with the financial mix and capital structure, which is the mix of debts and also equity. And the dividend decision. Dividends decisions relate to the distribution of profits earned by the organization. The major alternatives are whether to retain the earnings profit or to distribute to the shareholders. So guys, I have provided you with a very basic explanation regarding financial plans. So, till we meet again in the next video regarding business plan, please plan for your business finance neatly so that you will get the things that you stated in your business goals successfully, inshallah. So guys, take care. Thanks for watching. Tata for now. Assalamualaikum.